Good morning, traders. I'm Emmett, and welcome back to BCR's Daily Market Insights. Today, we'll focus on four key assets. We'll be looking at the dollar index, we'll be looking at gold, we'll be looking at the Aussie USD and Euro USD. So let's get started. First up, we've got the US dollar index or DXY, which is consolidating near the 108 mark after hitting a recent high of 108.55 last week. The index has been in a strong uptrend, supported by the Federal Reserve's hawkish stance and robust economic data. Looking at some key levels, resistance levels. The first resistance to watch is 108.2, which has held up well over the past sessions. A break above this level could push the DXY towards the recent high of 108.55, where selling pressure should intensify. Now, let's have a look at some support levels on the downside. Immediate support lies at 107.56, with further support around the 107 levels, a psychological and technical level. Looking at the indicators, the RSI has retreated slightly from overbought levels and currently sits at 64. This suggests the bullish momentum may be slowing down, but the trend remains intact. The 20-day SMA at 106.74 is also worth monitoring as a dynamic support level. With the broader trend still bullish, traders should be cautious betting against the US dollar in the near term. Next up, let's have a look at gold. Gold is trading near the 2620 mark this morning. It's caught between opposing forces. A weakening US dollar is providing support, but the Federal Reserve's commitment to higher interest rates is capping any significant gains. Looking at the key levels, resistance lies at 2627, which coincides with the 89-day SMA. Beyond this, 2663 is a key level to watch, marked by the 65-day EMA. Looking at some support levels on the downside, we've got 2583, the monthly low, and it's the first line of defense, followed by 2556, where the 130-day SMA resides. Looking at the indicators, the RSI is hovering around 54, indicating a neutral momentum. The MACD histogram is showing a flattening trend, suggesting reduced bullish momentum. Geopolitical tensions and physical demand from China may provide a buffer for prices, but technical traders should remain cautious around these levels. Next up, we've got the Aussie dollar, which has been absolutely smoked. It's trading near the 62.50 range, recovering slightly from last week's low of 61.99. The pair remains under pressure due to a strong US dollar and concerns over China's economic outlook. Looking at some key levels, immediate resistance is seen at 62.70, a minor hurdle, while 63 serves as the next key level. A sustained break above this could open the door to 63.50. On the flip side, we've got 61.99, last week's low, as critical support. Below that, we've got 61.70, which marks as a key zone to watch. Looking at the indicators, the RSI is gradually recovering from oversold levels, now at 31. Meanwhile, the MACD histogram shows weakening bearish momentum, indicating the potential for a further consolidation or a minor rebound. With the RBA minutes due, volatility could pick up, but the pair's overall bearish trend remains intact. Lastly, let's have a look at Euro USD, which is trading near 104.30, continuing its struggle below 105.00. While the selling pressure has eased, the pair is still vulnerable to further downside. Looking at some key levels, resistance is at 104.99, where the 20-day SMA aligns. A break above this could test 105.63, which is the 38.2% Fibonacci retracement of the recent decline. On the downside, immediate support is at the psychological level of 104. A deeper drop could target 103.32, which is the November low. The RSI has climbed modestly to 41, signaling a slightly reduction in the bearish momentum. However, the MACD histogram remains below the zero line, confirming that sellers still dominate. Traders should watch for US data releases and ECB's comments for clues on the pair's next direction. To summarize, the dollar index remains firmly bullish, while gold and major currency pairs like the Aussie USD and Euro USD are struggling to build upwards momentum. Key technical levels and market catalysts like the central bank's updates and economic data will guide today's trading action. Thanks for tuning into this quick market update. Keep these levels in mind. And as always, trade safe and smart. Happy trading.